You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Bootcamp.
All right, everybody, that music means it is Wednesday, Education Wednesday, as it's known around these parts. Time for a little bit of the old OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining these days. Thanks to all of you who are listening out there. We love you all out there. Remember, if you're just listening to OBC, you should be listening to the full network, pretty much a dozen other shows coming at you, usually 2 to 3 a day here on the network. And of course, if you're ready to take the plunge, theoptionsinsider.com/pro is the place to go for awesome pro Q&As, unusual activity, all sorts of fun, giveaways, live streams, exclusives, early access, you name it. Theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us on the old OBC show this week. I'm pleased to welcome back on our old friend, the black-hatted one himself, Daniel X. Passarelli III, Esquire. We all know the X stands for Xerxes. His parents, big fans of the ancient Persian Empire. Mr. Dan, welcome back to the show, sir.
Hey, man. Good to be back. My middle name is not Greek, but it is Italian, and it's pretty way up there with Xerxes. It's like, I could promise my oldest kid if somebody, guesses my middle name.
Oh, one of those ones. You'd win at the state fair every time, the guessing booth, when they have to guess your height, weight, and middle name. They never get the middle name. So it's October 1st, Dan. It's officially spooky season. So you can let your freak flag fly out there. You can have all your spooky stuff. This is when it's officially okay to put out all the spooky items. Unless you're like me and you always have a touch of the spooky. I always got little Frankie behind me over there on the shelf behind me, but I have all kinds of spooky touches floating around the studio. What's the spooky scene like in Frankfurt on October 1st? Are you that guy who has the giant 20-foot skeleton on his lawn, sir? I can get behind that.
When the kids were little, we used to decorate quite a bit. But these days, no, not really.
Your heart is black like the season, sir. You have lost the spirit over there in Frankfurt. We'll see if we can get him a little bit of that spooky spirit back as we keep on rolling into the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's get down to business with the mail call. We'll get to some spooky fun in a second. But first, well, maybe some of our questions of the week are a little bit spooky. I'll let you folks decide on that. First, let's pay off a couple from last week. Last week, we asked you, speaking of fear, a.k.a. the fear gauge, we got our old pal VIX last week. People were loading up on the Nove 16 puts 20,000 times last week for 47 cents. We said, do you like that? Are you a buyer? Are you sold to you? Would you rather buy them, but maybe as part of a spread, so you're selling something else, or you're going to sell them, but as part of a spread, so maybe you're buying something else? And Dan, about almost exactly 2/3, 65% of our audience said they wanted to buy those bad boys. 25% said sold to you. And then about 5% each want to buy them in a spread or sell them in a spread. Mr. Dan, Nove 16 puts, almost $1. Are you a buyer or sold to you, sir?
No, I would have to be a seller here for sure. It's absurd that the market is up like this.
That is strange. I guess we shouldn't bury the lead, even though people do listen to this months and years down the road. Dan, we are, speaking of spooky times, we are officially in shutdown territory again. And, we've joked for a long time that nothing can derail the bull. Not even the market shutdown, Dan, is derailing the bull today. S&P up 1/3%, 6,700 with the government officially shut down. Did you have that in your little bingo card there? Dow up about 0.1%, NASDAQ up 0.4%, and VIX cash actually selling off a bit, listeners, down to about 1615 right now. So, Dan, I certainly did not have that on my bingo card. Then again, we have been down this road before, specifically with Trump, so maybe there's some of that playing in as well. But yeah, they don't seem to be concerned in the slightest, Dan. Does that concern you?
No, I mean, it doesn't concern me. But you got to play it carefully because, the market can remain irrational longer than you can remain solvent, as they say. But I mean, I don't know, anybody who's opening up fresh long positions in this market or fresh bullish positions in this market, I don't know, man, they deserve to lose money. I mean, it makes no freaking sense.
Daniel Xerxes Passarelli says you deserve to lose money. That is his takeaway. Take that, you. By the way, speaking of Xerxes, we got our chat as guest Daniel Luciano Passarelli. Lucky Passy, they're calling me. That's why I was laughing earlier. I saw that come across my screen and it completely derailed me, sir. But I thought that was fun. I'm going to start calling you Lucky Passy. What do you think about that?
Yeah, okay.
All right, let's keep on rolling, listeners. To last week, we talked about maybe removing some transparency from this market. There is a movement afoot to change corporate earnings cycles and reports from every quarter to twice per year. Quite simply, do you agree with that? Or would you prefer to keep it quarterly? Or maybe you want to change it to twice per year? Or you want to go super crazy once per year? And Dan, this time exactly 2/3, 66.7% coming in saying they want to keep it the same. They want to keep it quarterly, which is pretty much the way you and I came down on it last week. More transparency, better than less these days. Once per year, this kind of surprised me, going the ultra European model, 17.9%. And then only 15.4% of the audience, Dan, is down with what the SEC, or I should say the administration, is really proposing, the twice per year model. What do you say, sir?
I try to be open-minded about stuff. I mean, I would love to hear the rationale for less than quarterly, but I mean, my initial instinct is it makes no frickin' sense. I mean, I wish I had less information about my investments. I mean, who on earth says that? That makes no freaking sense.
Indeed. Well, our audience does not agree. They want to keep things quarterly, at least for now, listeners. As we roll on into our question of the week from this week, again, getting back to the start of spooky season, maybe this one's a little bit spooky. We actually, sounds like we had good timing on this one. We were kind of debating this last week on the network, Dan, which kind of spilled over into the question of the week. This week, I just heard from our buddy Dr. VIX earlier this week. He's at a vol conference in New York right now, and they are debating this exact topic. So we are very timely on this, Dan. What is the topic? Well, we said, last week, and it's still true right now. In fact, VIX is selling off again. VIX hanging out in the mid-teens, while gold is setting new all-time highs almost every day, which raises the question, Dan, which is the better gauge of market sentiment? Dare I say it, which is the better fear gauge right now? Is it gold? Is it VIX? Or is it some other crazy thing you like? Maybe you're a fan of the MOVE index. I don't know. But Dan, it does seem like we're getting two very different signals from the fear gauge itself and from gold. What are your thoughts on that? And which one do you think is doing the better job of it right now? And which one do you think our audience is choosing?
Well, I think that right now gold gives a better sentiment, but you have to back out the one factor in there that is global central banks buying it. So that gives it a natural lift. If you take out that natural lift, I think gold is a better sentiment right now than the VIX. There's a great deal of evidence that market sentiment in general these days is kind of lost touch with reality. It's become politicized, which is, you can have all your political views as you want, but you start trading based off those and you're going to run into trouble no matter what side of it you're on. So I think that the market has become irrational, maybe based on that, but the people who are buying up gold outside of the central banks, I think that they're hedging against the irrational market.
A lot of irrationality out there. Let's see what our audience is choosing. Dan, right now, 68.2% are going for gold being the better fear gauge right now, Dan. 31.8% for gold. Surprisingly, no write-ins for others yet. Usually we have a couple of weirdo others out there. But speaking of weirdo, Dan, we got more suggestions for your middle name. How about Daniel Garibaldi, Pastor? I like that one. I like that one. Garibaldi.
Well, getting warmer. It's closer than Xerxes.
I don't know if anything could top Xerxes, but we'll see. Oh, we also got some stereotypical Mario or Luigi. I don't know. Are you a plumber, Dan? Are you a plumber in your other life?
God, geez, these stereotypers out there, but I kind of think it's funny. But
Garibaldi is a pretty good one too. I do like that one. And you know what else is good? It's the market taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Dan, we know when you're not talking to us, you're busy slaving away on the new Passarelli tome called, appropriately enough, Xerxes on Options, or maybe Garibaldi on Options. I'd buy both of those books. But Mr. Dan, what do you got for us? Question of the week style this week, sir.
Yes. So with the market at these historically nosebleed elevations, how do you hedge your longs in this market? And I'll tell you what, it becomes a little bit tricky because, like we mentioned a minute ago, the market can remain irrational and you can buy puts, but then the market keeps going up. You're out on your puts. That being said, buying a put is like buying car insurance, and you hope to lose money on your car insurance. So you always have to really pick your spots carefully. And as much as I think it can be a lot of people, especially contrarians, gut instinct that when the market is up, we want to buy puts. I think you really need to wait until you get some of that confirmation that the market could be turning around. You've got to let that first little bit of upside, you've got to take a hit on that first little bit of upside and wait until things appear more imminent. And not just on gut feel either. It's got to be based on something like, RSI crossing back down below the 70 line or bouncing off resistance, which there is no resistance in a lot of stocks in the market in general. So there is my question and answer.
Maybe you'll resist some of these, Dan. What about Daniel Capone Passarelli? They're keeping the stereotypes. Was your family around in Chi-Town in the 20s, sir?
Yeah, they were. Hey, I'll take it. It's better to be feared than loved, right?
There is some rumor that I had because my family was back east at the time, but there is some rumor that there was a great grand uncle or something like that hopped on a train out to Chicago around that time and was never heard from again. So I don't know, maybe he got mixed up. That's kind of some Longo family lore, but I've never been able to verify it. Maybe he was one of those guys who was hanging out in pizza and oven grinders right around St. Valentine's Day. You never know, right? There's a Daniel Anthony Passarelli. That's the worst guess. That's no fun. That's boring. Anthony, is that right, Dan?
And it's pronounced Anthony, by the way.
Anthony, yes, the Italian South Side way. Anthony. That is the most boring guess ever, Queen. Everyone else is having fun. She just goes straight for Anthony. Okay, sure. Why not? I guess she's whooping everyone's butts in fantasy football, so I guess we have to let her have her quirks. All right, Dan, let's keep rolling to the spirit of the season, the spookiness. It got me thinking of it from this question from LTON, maybe just Elton, the cool spelling. He or she wants to know, happy early Halloween, Mark. Oh, well, happy early Halloween back at you, Elton. He says LTO, long time, first time. You don't see it abbreviated too often. Well, welcome. Thanks for writing in for the first time. He says, in the spirit of the season, are there any updates to your list of the scariest option strategies? Yeah, you got me thinking, Dan. This time about a year ago, we were cultivating our lists of the scariest, most terrifying option strategies of all time. So I had to go refresh myself. He wants to know if we have any updates. So first I had to go see what we said a year ago, Dan. And I have your list here first. And your list was number 5, any trade that you don't understand. And then number 4 was the quote-unquote easy ones. Maybe you can refresh us on what you meant by those. Maybe you just see it's too good, sell the put. It's too much juice. It's easy. Number 3, naked short calls. I think we both had that was number 2 on my list. Number 2 is ratio spreads. So the funky ones, again, net short units. And then number 1, which is kind of funny in light of what you're trading a lot of right now, which is straddles. Last year, your most scary, terrifying strategy was straddles. And these days, it seems like every time I toss to you, Dan, you're talking about another straddle. So what gives, sir? What changed over the past year? Are you no longer terrified of straddles, sir?
I mean, they have their place. You should, look, you should be scared of all option strategies. You should have a reverence for every trade, right? Knowing that something could go wrong. And with straddles, things go wrong more often than not, which doesn't make them a bad strategy. It just makes them a strategy that you need to be very selective for and mentally prepared to take small losses before they become big ones. Not to mention, just volatility has picked up overall, and volatility as a result of earnings has picked up just quarter after quarter over the last, what has it been, a couple of years maybe? We'd have to check back with Matt from ORATS to get a better answer on that. But yeah, I mean, I like them. I've always been warm to them, but they're tough. They're tough.
Indeed. I actually had naked short straddles as my number 1, Dan. So, because again, I had naked short call number 2, which makes obvious sense. You're short all that risk. The naked short straddle is just a naked short call plus a short put for fun, right? So So my number 3 was naked short put, so I combined them both into number 1. I think that makes intuitive and logical sense. The flip side, long straddles can be challenging as well. They're not quite as terrifying to me, though. They're more of a death by 1,000 cuts than they are just rip your face off kind of death, the way the short straddle is out there. So that was my list, and that was Dan's list. We also asked our audience last year this time, Dan. Maybe we need to do this again closer to the Halloween holiday. But we said, which option strategy scares you the most? We gave them 3 choices and the infamous other Dan. We said naked short straddles, naked short calls, or naked short puts. Don't cheat. What do you think won from last year, Dan? Do you remember?
I don't remember, but probably naked short straddles.
No, it was naked short puts, 37.5%. Huh? Scarier to our audience than the infinite upside of the naked short call, 31.3%. Scarier than the naked short straddle, which is both of them together, Dan. So they're scared of a short put. Short straddle doesn't scare them that much. 18.8% for that one, and then 12.5% for other.
So I'm afraid of short calls. I'm afraid of short puts.
Put them together, it's fine.
It's fine.
It's like I'm scared of spiders and snakes, but give me a box of spiders and snakes. I'm cool with it. I'll put it all over me. I'll roll in it. Yes, our listeners. Speaking of our listeners, they're saying they're correcting that from Anthony. It should be Antonio. So Daniel Antonio Passarelli. How's that, Dan? We're getting closer? Closer to winning one of your children?
Technically a little closer, technically.
I still like Xerxes myself, but hey, you know what, Dad? I had an amendment because I don't have any real changes to my list. Do you have any changes to your list?
Oh gosh. No, I mean, I don't know. Not really. I mean, how about having long deltas right now? That should be on there, but you know,
you're just loving this market. I love it. You're like, if you have any long deltas, you should be terrified, and you deserve to lose money if you're buying this buy right now. You're just full of them today. I love it. I love it. Good stuff. Which way is Dan leaning in his personal account, listeners? I love it. If you have one long delta, you should be terrified. Well, Dan, I had an amendment to this because he got me thinking about his spooky season question. And I thought, let's tag along to that. And I don't think we have any real changes to our strategies that scare us. But I had this thought. What about the scariest moment of your options trading career? I could think of a few of them, but I think the one that leaps to mind to me is one I've related on this show before. So I will go first, Dan. I will buy you some time to mull over yours. But for me, I was still a market maker. That makes sense. I was slinging the most size positions back then. And that's, of course, this is kind of in the tail end of the .com go-go days. I was brand kind of new to trading out there. And, of course, we had the after-hours emergency announcement of a guidance cut, effectively an earnings cut, mid-cycle by Intel. That'd be like the equivalent of NVIDIA doing that today, listeners. It was Intel and Microsoft that were kind of leading the charge back then. So to have Intel come along and do that was kind of the first sign of maybe a bit of a chink in the armor, the bloom coming off the .com rose. And so instantly the stock's falling out of bed. And so doing some of my gamma hedges. And of course, that night I'm terrified. I'm like, what am I going to do? I'd never been through I started in the SPX first. We had some sell-offs there, but you're not talking 25% or more in the SPX. You're not seeing those. So it was kind of a very different beast for me, my first time rolling through that. So I remember I came in. Luckily, I had been trained well. I had some bullets in my back pocket. I wasn't short a bunch of net short units, which, again, is why we caution you against that, listeners, for moments like this. Then you have some bullets in your gun to fire when things get juicy. But I remember, Dan, what really sealed it for me and made it extra nerve-wracking was coming down the escalator to the floor of the SIBO. And even from there, that morning before the bell opened, I could see the crowd growing around my pit. So it wasn't just the guys who were trading there. And then there were, of course, rows of brokers behind them, just lined up with orders ready to go. And I was like, okay, here we go. But then behind them was just about 10 more rows of every other guy on the floor who was just bored. They were all lined up. They weren't even there really to trade, because that would have been a big deal if they tried to, trade on that day. But They were just there to watch. They knew it was going to be just an absolute barnstormer of insanity, and they wanted to watch the chaos. They wanted to watch the car crash unfold in real time, Dan. So that definitely put a few lumps in my throat. I was like, what the F? What is this? I've never seen anything like this before. So that was pretty terrifying. Ended up working out pretty well. The long gamma certainly helped. Having the bullets helped. It became a challenge, Dan, of, I've talked about this before, trying to gauge that optimal moment, right? That optimal moment to sell those puts, those bullets you had left. You want to fire that last bullet, listeners, at the exact optimal moment when the stock sell-off has kind of reached its nadir, when the customers have exhausted themselves paying 4, 5x, 10x for the puts, the vol levels they should normally be trading. That's when you want to fire your last bullet. You can't fire them too soon. And so that was the big challenge that I learned that day, Dan, which ended up being a useful, and it's always fun when you can sell puts at, some vol level and buy them back by the end of the day for like a third of it, right? That's a good do, as the kids say. So yeah, that was terrifying. I ended up working out pretty good, but when I still think of days that gave me the cold sweats, that's one of them, Dan. What about you?
Oh, it was probably the one where I know I talked about this on the show probably years ago, just when Ford spun off like $20 worth of cash and went from 46 to 26. And there was like, there's like a weird Vega thing that goes on when companies do that. And I didn't really understand. Nobody in my pit understood it because it's a very, very rare niche sort of thing. And, just came in the next morning like, how come there's $500,000 in my account less than there was yesterday? and then fighting my way out of that, just scary. I don't know, stressful. Yeah. And that's when I was at the height of my career, as far as size trading, and, I had to take off like, oh, okay, I'll sell you 3,000. And it's like, geez, I hope I'm doing that right.
The old 3,000 line. You do those all the time. Yeah. Do those all the time, Dan.
Yeah.
Out there. So yeah, good stuff. The Intel thing I had a whole night to ruminate on it, which made it worse, I think. If it just happened intraday, it'd be a little bit different. But I had a whole night just lying there, tossing and turning, thinking about what the next day was going to be like, which certainly added to the fun. But let's go out here to more fun. This comes from Marlon. Marlon says, hello. Well, hello, Marlon. He says, OBC is in regular rotation on my phone. Thanks for all that you do. Well, thank you for being a regular listener there, Martin. Marlon. He says, I've been racking my brain for a while now, trying to think of a question you guys haven't already answered. There aren't that many. But last night over dinner, my wife asked me if there are any particular foods that are associated with options trading. It gave me pause. I couldn't think of anything. So I thought I'd put it to the experts. Can you think of any? Off topic, I know, but blame my wife. She's a non-trader. Well, Dan, he certainly gets points for asking a question we have never been asked before. That is certainly true. Dan, I think you are uniquely qualified to answer this as not just an options trader and mentor and author, but also the former proprietor of Corks and Knives. Quite the foodie yourself. So when someone asks you, is there a food, maybe we'll broaden it. Maybe options trading is too narrow. Maybe is there a food associated with trading you could think of, sir?
Well, like when I think of questions like this, I mean, here's where my mind goes. Option trading, derivatives trading, but especially options trading. Well, no, especially both, is Chicago. That's where they were invented. That's where they were perfected. That's still the international hub of options and derivatives, futures, the whole shebang. So I just sort of relate Chicago to trading, Chicago to food. So, I mean, I would go with, like Italian beef sandwich, Chicago style hot dog. Because, traders, I mean, it's very important to eat healthy enough so that you can focus and all. But do traders really eat healthy and focus? No, we drink like fishes. We, like our Italian beef sandwiches, the whole shebang. So I think that's how I would answer that question. I don't know. What do you think?
Yeah, I was thinking the same thing. I was like, I don't know if it's a cheat, but the same thing when I think of food associated with trading. I think of things that were literally within proximity to the floor, because that's where we used to eat, right? So you go out to the Bonavino place, you go out, Peppers used to have those good, very greasy sandwiches and burgers back then. So there's a lot of little things right around the exchange there. Of course, a lot of people are going to say Ceres. Ceres, I think, is more famous for their beverages than their food. I can't even remember any food I've ever had at Ceres, but I can remember the beverages, certainly. They stand out. You knew your guys were having a bad day. If you look around the pit, where are they? Oh, they're at Ceres at 10:15 in the morning. You're like, okay, they're already hung on some deltas. This is going to be a bad day. But yeah, so that's kind of when I think of options trading and food. I'm kind of along those same lines, like greasy trader-like food that was available right near the exchange. If there was an Italian beef place, that would certainly qualify as well out there. Along those lines, if you could say deep dish, but that's a cliche one. But there wasn't really a deep dish place, at least by the SIBO, that I can think of. So yeah, there we go. Who asked that, Marley? You get points. So maybe we'll put it out to our audience. Oh, a lot of our chat's mentioning Portillo's. Yeah, we do talk about Portillo's a lot. We've been trading it around on our options oddities. So Portillo's would certainly count. That kind of covers all of the above. It's the Italian beef. It's the burgers. If you're going, you got time, you got some ribs in there, crazy shakes. So yeah, that's certainly Portillo's is Chicago cuisine personified out here. So that's a good answer as well. All right, let's keep rolling here. Let's go out to this one from Small Things with the Z. He just wants to know, can you do an episode on collars, please? Well, you're lucky, Small Things, because we have done quite a few on collars here. I searched right before the show for you folks, just so we could get the exact episodes for you. Here's just a few of them here. Small Things. The most recent one we did was on July 19th of 2023, episode 246, entitled Vanishing Volatility. Episode 239 from May 31st of that year, Apple collars we talked about in particular on that show. Episode 164, going back a little bit now, December 8th of 2021, we talked about modified collars on that show. Episode 133 from May 5th of 2021. This is a halfway house for stock traders, this is called, but there's some collars involved. I think we had a listener question about collars there. Episode 104 from September 16th of 2020, entitled Buying Puts and Selling Puts, and also why you can't trade the VIX. We got into collars a little bit there as well. Episode 77 from December of 2019, Hunting for Income in a Low Rate Environment. Those were the days, Dan. Remember those days, those low rate environment days, Dan?
Yeah. People think that those are going to come back right around the corner.
Apparently, by all these rallies we're seeing out there. Yeah. And then episode 71 from December of 2017. So December apparently is our collar month. We did episode 71, Protecting Your Gains Using Options. So obviously, collars very much near and dear to that. A few more here. Episode 64 from 2016, September 2016, Settlement Myths and Misconceptions. Talk about collars there. I think another listener question. Episode 47, back from July 11th of 2014, Dan, Protecting Your Profits. And episode 46, right before that, from June 16th of 2014, Building a Better Hedge. So, Dan, we've done quite a few collars here on the show over the years. But tell you what, who asked this? Small Things, really quickly, because you asked so nicely. Let's do a real quick overview of the collar yet again, just for you folks. You obviously can go back into the archive, check all this out at any time. And we know a lot of you do. Collar XYZ, your favorite, trading at $100, listeners. You own some stock on there. You just own 100 shares, that's all. You decide, I'm a little concerned about some downside here. I'm going to buy a 1 month 95 strike put. In our example, cost you $1. So obviously 1% of the value of your underlying there. But you decide maybe I don't mind if it gets up to 105, I'll let some go as well. So you decide to sell the 1 month 105 call for 25 cents. There you go. Your net outlay now 75 cents. So the immediate benefit of the collar is obvious. It's reducing your outlay. Slightly cheaper. Another upside pro of that is you can participate in the upside still all the way up to 105. But that's it. Now you see one of the downsides of it is that it's not that much cheaper. And then in any equity, you're going to have that same problem. The puts are always going to be more expensive than the calls. So it becomes a delicate dance of how do you set them up. And usually, we've talked about this before too, usually the right answer is to push the put farther out in time and then make the call nearer in time. So you're collecting a lot more decay on the call. You're not paying as much on the put. Obviously, there's challenges with that as well, where you have to roll it. Usually 6 months seems to be about the optimal sweet spot from a lot of the research and analysis I've seen. But we're just doing it all in 1 month here. And then the other downside is that, your upside is capped to 105. Dan, any additional thoughts you want to add in for small things on collars, sir?
Yeah, well, I mean, first small things, you should be binging this from the beginning, man. That's what I do with podcasts, but I'm a big nerd. But, I think you kind of have to be a big, at least a little nerd to, to get into options. It's kind of one of those mathy sort of I think have to have a little bit of a nerd side to you. But yeah, that's what I do. I just binge like crazy. Right now I'm binging, what is it called? A History of Rome. That's a really good one.
Oh, Aurelius. That's your middle name. Daniel Aurelius Passarelli. There we go. I hit on it right now. How about, did I win? Do I win your kid?
No, it's not it. It's not it.
We're close, listeners. Close. Send in your suggestions for Dan's mystery middle name. We have established it is not Xerxes, Capone, Aurelius, or the extremely boring Anthony. All right, Mr. Dan, that music means we've come to the end of this little spooky sojourn through the world of options. I have a feeling we'll be doing more spookage as the season progresses out there. I see home. Dan, maybe you think for a future episode you want to talk about pattern day trading, sir? Is that on your radar?
Yeah. I was thinking about that. I'm glad you saw that. Because there's been a little bit of chatter about maybe the powers that be lowering the limit on that, and I think we should talk about it.
All right. We will add it to our upcoming topics list. Oh, we got another one. Caesar. Daniel Caesar Passarelli. Or you can go Octavian, Octavius. Those both work. How about those? Any getting warmer?
No. How about no.
Augustus.
Augustus.
Daniel
Crassus.
Augustus Passarelli. Now I'm mad I didn't name my kid that, but I digress. If folks want to send in their own guesses, Dan, where should they go? What should they do?
All right, send, wait, just before we go, this is one thing that I got shot down on when Kathleen was pregnant with Sam. We were going through names, and I wanted to go with Niccolo.
Oh, little Machiavelli.
Yeah, but I got shot down on that one, and Sam is very, very grateful that I didn't name him that. But I think it would have been good.
That's my other guess. Machiavelli. Daniel Machiavelli Passarelli. You didn't have enough vowels and consonants and syllables in your last name. You had to go Machiavelli middle name. Here you go. I think I got it now.
Yeah, anyway, you can hit me up at markettaker.com and market as in stock market, taker as in take what's rightfully yours, 2 T's in a row, markettaker.com. That's where you can find me.
Markettaker.com. Don't forget the second T for theta, unless, Dan, all this time it's been short for your actual middle name, Tiberius. There we go. Did I get it? Daniel Tiberius Passarelli III, Esquire. I got it now, listeners. That's it. That's it. He has the same middle initial as James T. Kirk. All right. Listeners, if you send in your guesses, maybe closest to whoever wins Dan's child. So it's a fair price. Of course, I think you got to pay for some schooling with that. So maybe a prize you want to send back. But in the meantime, if you want more in your lives, just stay put. If you're hanging out in the pro, I'll be back in a little bit with the folks from EdgeClear to break down all the action in the world of futures. A spoiler alert, it's a lot. Probably get into that gold fear thing as well. What's going on with this rally? All sorts of fun stuff. So stay tuned for that in a little bit. And then, of course, we'll wrap up the day after the closing bell with a little bit of the son of Odin himself, a.k.a. Thor, a.k.a. the Hot Options Report. Yet another reason why you should be subscribed to the full network list. Otherwise, you're missing out on a whole bunch of great stuff Then we've got all sorts of fun coming at us throughout the rest of the week. The Flow Master joining us on Option Block tomorrow. Twifo, of course, with our friends at CME. Vol Views. Dr. VIX has told me he's got some fun stuff in store for Vol Views this week, so it should be a fun time. And then we're back again next Monday. 80s, or not, yeah, it is 80s trivia, but it's not really about the 80s. 80s trivia challenge on Monday on the Option Block. Crypto rundown. Tuesday, all kinds of pro stuff. And then we're back again next Wednesday with Daniel Tiberius Passarelli for another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.